Welcome to our video podcast that we're hosting with the Dominant Strategies team and the Portal Finance team. And today with me, I have the CEO and co-founder of Portal Network, Chandra, and I have the CMO of Portal Network, Dan, and I also have the COO of Dominant Strategies, that is one of the companies building Quai Network, David. Would you like to say hi?
Hey guys, I'm Chandra. Nice to talk to you all.
Hey, how's it going, everyone? Dan, excited to be here. Like Veronica said, I'm David, COO over at Dominant Strategies, helping to build Quai Network.
Awesome. So today we're going to talk a bit about the Bitcoin LTOs, the narrative of Bitcoin, the future that's coming for it, especially with the changing circumstances that they are happening. Let me probably start off with how Bitcoin initially was. So we had this idea of Bitcoin being the digital cash. And then we realized that the TPS were not really supportive of that narrative. It transitioned to being the proof of work, digital gold store of value. And then somebody came up with Ordinals, and we realized that, well, the network is congested and people started coming up with L2s. We now have runes as well. So people are just trying to bring DeFi onto Bitcoin, even though it was not initially planned to be so. So my question to you is, so we can probably start with David. How do you see the role of Bitcoin evolving with these new applications?
I'm one of the folks who kind of takes issue with the kind of characterization that you just provided and the assumptions about what digital cash means and is that underlie them. And when I first got into Bitcoin in 2011, 2012, and the cryptographers of all the systems that led up to Bitcoin, digital cash meant something a little different, more specific. That is like a peer-to-peer bearer instrument, not necessarily one that had to scale to like pay for everybody's coffee in the world. And so that kind of like narrative that like it couldn't serve as coffees, while that is true, was kind of reading a little bit, in my opinion, too much into what digital cash in the white paper was. Now, who cares what the white paper meant? Who cares what Satoshi meant? We're here now building on top of it. So that's more of a semantic point, but I will say that it has been wildly successful as like a peer-to-peer digital bearer instrument, and the first one that has like worked at any sort of scale ever. So let's like start there. But yes, you're correct. Just like you have the Fed wire network that only settles about the same amount of transactions as Bitcoin, and then you have like layers on top of it, like ACH and Visa. Now we're talking about, okay, maybe that's what Bitcoin looks like. So just to put that in perspective, I think that Bitcoin has been very successful, as you mentioned, as digital gold, and it has been wildly successful as a settlement mechanism, albeit just not at like the consumer end user layer to the scale of like a Visa net. But that's not really what our cash system today is anyways, at least in the US with FedWire. And so I come at it from that angle, that Bitcoin has been wildly successful as a store of value, as an asset, bearer instrument, and a settlement mechanism. Now you're correct, and that's where it seems like Portal and others come in. Hey, how can we expand that? And whether that is to be like payment for coffee and every day across the globe, transactions at that sort of scale, or whether it's evolving into like NFTs or whatever else, the beauty of it is like I at least don't get to decide. Collectively, and how we use it, what we build on top of it is the thing that decides. So I have my own opinions about it, but like nothing like this has ever been built from the grassroots up in this manner before. And I don't think like folks like Portal who are building on top of it, that's what's going to decide what Bitcoin is.
Dan, do you think Portal is the one that's going to define DeFi in the future for Bitcoin?
Portal, we're building infrastructure to be able to enable a lot of different applications at Bitcoin. To David's point, I think that it's not simply digital gold, and it's also not simply a settlement layer, and it's also not peer-to-peer cash for everyone, for everything. I would say that it wasn't exclusively meant to be a digital peer-to-peer payment system. Satoshi put out that the chancellor is bailing out the banks in the Genesis block. So obviously he saw there were a lot of issues with the fiat system and how central banks are managing their fiats. So he saw that this is a bearer instrument and could be also looked at as a commodity. So I think that it wasn't that it evolved to become digital gold. I think that that was part of the design from the very onset. This network isn't just a settlement layer for assets. It's a powerful network that's extremely distributed and extremely secure. So at Portal, we're building infrastructure that scales both vertically and horizontally so that you can build a lot more wide variety of types of applications and use cases leveraging the Bitcoin network. So I do think that we are going to be the infrastructure that is being built, the architecture that Portal is building is going to have implications for applications such as DeFi applications.
Portal is an L2 for Bitcoin that like is what you are building. Would you call an L2 or a different type of thing?
So L2 used to mean a little bit different things when L2s came about. So you have these unbroadcast transaction states that we hold in outside of the blockchain. And then we periodically settle. That's a way to increase the throughput, right? Like you talk about transaction throughput. Lightning is an L2, Mercury layer is an L2. What we're actually building, if you look at it from that perspective, is an L2 infrastructure. But every sidechain is LARPing as an L2 now, and that's become common knowledge. So we don't call ourselves an L2 anymore, and we have to call ourselves middleware for enabling all these pegged or unpegged sidechains. And also to touch upon Dan's earlier point, it's a new kind of a beast, right? Like you don't necessarily get to classify it in the previous species categories, right? It doesn't neatly fit into that. Initially, Bitcoin block space was just for Bitcoin, the asset. But now these NFT thing and runes, Bitcoin block space has become the commodity, right? Like it's not Bitcoin, the asset. And what is the function of the Bitcoin block space? It's a settlement layer. It's the global seamlessness is the primary property, and trust minimized settlement layer for all sorts of markets, ordinals, NFTs, runes, sidechain assets. Bitcoin is transforming from digital gold to the settlement layer for millions of markets. And I think we just see the beginnings of this with these L2s.
Yeah.
We're just building the trust minimized middleware between the base protocol and all of these markets while preserving basically what makes Bitcoin what it is, trust minimization.
How do you think all this affects mining and miners themselves, though?
I think it's great for them. So I've never met a miner. There's a lot of people who complain about ordinals are an attack on Bitcoin or runes or an attack, whatever, right? If you understand miner incentives, miners mine to make revenue. They have fixed costs and they have to make back their capital expenditure in 18 months roughly. But that was when we last looked at it, 224. And then if there's two sources of revenue. One is block reward. The other is transaction fees. As the semantic density or economic density of these transactions increases, now each SAT is not just a SAT being, moving from one payment encumbrance to another payment encumbrance. Now they have all sorts of different properties. And the fees, the transaction sizes grow, they can charge much higher fees for these transactions. Their revenue increases. So we actually used to think this is not going to happen until maybe 50 years from now. See, the assumption behind this is the revenue from fees has to catch up to the loss of revenue from halving every 4 years. And anything that increases miner transaction revenue early and reduces the dependence on the coin's continuous doubling in price in line with the halving that happens is a good thing for miners.
Do you think this could be the solution to the Bitcoin final supply issue?
Absolutely, I do. I mean, there's people who want cheap transactions, which basically means they want somebody else to pay for network security. Or you pay for it through inflation. There's only two ways to slice this. It's not that complicated.
Yeah, people do want cheap transactions. That's kind of one of the reasons Quai Network is being built, with a goal of decreasing the transaction fees and mainly addressing the scaling issue. In terms of Portal, what are you seeing in proof of work? Why did you even start building this kind of thing of an atomic swap on Bitcoin? When you started, it was not as big of a thing, as big of a narrative as it turns out now.
I mean, we started from first principles. So we came from Bitcoin. So the goal was always people are going to speculate many different assets against Bitcoin, right? Like that's been happening since 2010, fiat to Bitcoin speculation. And there was Mastercoin, colored coins. And then with Ethereum and ICOs taken off, it became a big deal. And then these ones and L2s keep coming up. To your question about why Bitcoin, I think it's a singular entity which doesn't have any parallel in terms of whether it's creation myth, whether it's the technological design choices that were made, whether it's the absolute rock star way in which it was bootstrapped, and it continues to be the Godzilla in this space. I mean, there's no second place really. As an entrepreneur, when you're trying to build something of value, the problem we faced was that centralized exchanges turned out to be a very, very bad deal for the users at that time, right? When we started 2017, 2018. terrible for 6%. So that was a problem that was personal. We used to keep a track of how many exchanges were collapsing. There was weekly, like all of these CoinDesk, Coin Telegraph, and all of these were full of, hey, another exchange collapsed. This guy ran away with the money. Another exchange collapsed. Blah 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 blah. After a while, they stopped writing about it because it's become such a common piece of news, right? Same thing started in 2019, 2018 with bridges. A bridge collapses today, another one collapses tomorrow, and it's become kind of like loses its newsworthiness. It's like, how many Boeing airplanes are you going to track that drop their tires from the air? Something like that. So it's a catastrophe. And so we were very interested in solving this cross-chain transaction problem. We went, down all of the different ways in which you can solve it. Obviously, you can build a bridge, you can issue a derivative with custody. The only right way to solve it was atomic swaps, because that actually is an elegant solution to an old, long-standing problem called the fair exchange problem. It needed to have a lot of tweaks and bells and whistles and modified by a lot. But the underlying concept is very simple. If you just trust the two blockchains exist and they're secure, and if you trust the hash functions that are used in those blockchains, that's all you need. Everything else is kind of just programmable logic. From first principles, atomic swaps make sense. It takes a lot of time to make them work for bringing the user experience, the usability, fitting the use case that the users want today. We think that's the way to go, because it actually preserves what these blockchains offer you. They offer you self-sovereignty over your money. It's a digital bearer instrument, like David said. They're uncensorable, they are not confiscatable, and we want all of those properties. So when people say see DeFi, or hey, do DeFi on my one node centralized custodian things, there is a logical incongruity there. We like simple things, logical things. Proof of work. Why proof of work? Because proof of work is one of the greatest innovations in monetary history. I think it'll go down as everything else is kind of a rehash of the old stuff.
I think we're seeing this thing where we're trying to build this two-sided market, right? And we kind of had to go to the consumer apps and get things people wanted to use, whether it's just pure speculation, whether it's like kitties on chain, hamster races, whatever. And you kind of make some sacrifices. The next marginal compromise is what I always call it. When you get to Ethereum, Solana, the next bridge, the L2s that are like three guys in a trench coat, because you want to make a user experience that's like something people want to use. Great. You get some people excited. And then it's like things start breaking, whether it's the centralized exchanges or some of these bridge mechanisms or like these, like custodial, like one node systems. And you kind of have to swing back to the infrastructure and build back. And same thing kind of happened with proof of work. I mean, Bitcoin still is like the gorilla in the room. It is like the best thing that exists. And it's quite a margin is the next thing. But then proof of work started getting villainized, like on environmental and other basis. It's not efficient, but now we're swinging back to proof of work, to infrastructure. And as a result, in my opinion, the proof of work and this like trust minimized broader set of infrastructure is like a totally underexplored design space as a result. We've been like focusing on like the more end user consumer stuff. And to be fair, we still haven't cracked that side either. But, we've been there, and now we're coming back and we're saying, well, what else do you do proof of work? And you're seeing folks like, hey, can we build like atomic swap, properly composed side chains or L2s or whatever else to Bitcoin, drive chains, etc. Can we build like scalable proof of work, like a Caspa, like based on a ghost tag arrangement? Or can we use like a Quai? One thing that attracted me there was we use proof of work as like almost like a trustless oracle to understand minor costs and input costs for computing power and energy. And hey, can we represent that with like a decentralized stablecoin like alternative on chain? So there's all these things that proof of work is truly, truly, truly innovative, and it's totally underexplored. So I'm really happy we're kind of pendulum swinging back. Bitcoin L2s, side chains, drive chains, Ordinals, Runes, all this stuff, but then also it's other proof of work networks, which, but like so far, we haven't really seen anything come close to Bitcoin other than the old ones that have like merge mine, Litecoin and Dogecoin and stuff like that. But we're starting to see some new competitors, Caspa, Quai, some other ones. So I'm pretty excited about this cycle, even though so far the summer isn't treating us very well in the market. The infrastructure side has been built out as I was hoping it would.
Surge in the proof of work is kind of helping out that Bitcoin is like the SEC sees Bitcoin as kind of the only one that's okay. At least it did so for some time. That allowed some more institutions to come into crypto. And how would you say that is affecting the market dynamics nowadays? And how does it maybe affect the future of proof of work? And maybe we're going to see more proof of work because of that?
And obviously, right, like the beginning of this year with the spot ETF approved, and that completely changes the flows and access to crypto. So crypto used to be most of us, like our little kind of niche corner on the internet, the kids that are lurking in Discord and Telegrams. And now it's a globally accessible asset, and it's getting put into pension funds, and it's getting put into like asset allocators are people that are working in hospitals and schools and fire stations are now getting put into their pension funds. So that completely changes the dynamic and really opens up the door for Bitcoin to be more of a globally adopted asset. And I think that's really exciting. Obviously, that's also happened with Ethereum. And I think that all of these are really good news for just overall narrative and kind of acceptance of crypto, because, you know, there's always going to be bad PR. And there's always going to be media that's attacking crypto or highlighting, like Chandra said, the next centralized exchange that goes down, and then painting that as the face of the entire industry. But seeing these kind of tried and true time battled assets like Bitcoin and Ethereum gaining institutional adoption via the ETFs, I think completely changes the narrative and the landscape. What does that mean for prices or market dynamics? I think that's, you know, to be seen still. But I think that there's going to be a lot more passive flows instead of everyone flocking in a bull market and everyone running away in a bear market. So it'll be interesting to see how that plays out. But I also think that is very bullish, to your point, Veronica, for proof of work chains. There's definitely a resurgence to needing actual energy to secure something. And it's really cool to see Quai kind of leading and innovating in that space. So overall, I just think it's really cool to see these developments happening versus these crazy boom and bust cycles.
Yeah, we'll see. I mean, as a reformed corporate and securities attorney, and then actually finance, like New York guy, I like helped build and run Grayscale from the ground up. And so this is back in like 2013, was the first guy there generally managing it. And we thought that was going to force the hand of the SEC to like approve ETFs a lot faster. Obviously, it's been a longer road. One thing I will say though, it's great that you're getting like this sort of recognition of the asset class. It's great that you're getting these flows that support things like miner revenue and prices and things like that. That's all great. That kind of ties into what I was saying earlier. That's all great, but we also can't let like it totally be Wall Streetified. The whole purpose here, that's great, but we still need this infrastructure. And two, in terms of institutions, those are the old institutions. We are the institutions now. Like on one end, like the Coinbases, Kraken, Circles of the world, but then also these new layers, infrastructure, protocols, and networks. These are all atomic swaps and marketplaces. These are the new institutions. So it's a little bit, while yes, I come from that world, I respect that world. Wall Street has done, despite it being vilified, a lot of good in the history of time, and so has finance as a mechanism to help scale and grow technology and welfare across the world. Like, we're doing something new here, right? And so it's a little bit backwards to be like, when are the institutions coming? It's like, no, we're building the new institutions here from the ground up. And so like, they're already here. The Coinbases, Krakens, and Circles that look like the old world, but are bringing it to the new, and then the new kind of infrastructure, protocols, networks, and things like this. These are the new institutions. I'm pretty bullish on both, but like, it's basically an S curve that takes it to the next cycle of innovation upward.
But, you know, to the point of the time when we all had this breakdown of the centralized exchanges, one goes down, the other goes down, I would still say that it did not like mess up them too much. Like, I would say 95% of trading, maybe it's all stats, still happens on sexes. Why do you think that is? That despite all the bad news that people had about those, we're still...
So that reflects that's a great question, by the way. It's the risk tolerance and preferences of the people who trade these things. First of all, memories are short. In this space particularly, attention spans and memories are very short. People who are trading understand that they are far under the risk. They don't think it's going to happen to them. They do understand that they're playing with fire, but nobody actually thinks it's going to happen to them. Otherwise, they wouldn't be playing with fire, right? The second problem is none of the decentralized exchanges actually reach parity with centralized exchanges in terms of speed, the number of pairs available, transaction fees, especially because crypto moves so fast. It's a big hurdle. So, which is why layer one atomic swaps were impractical and could never be implemented. When we started, there were like 3 companies. There was Sharon Goldberg and her team and Arvin, a couple of guys at Soma, and just us, and that's it. it's really, really, really hard to make atomic swaps, to construct an entire L2 system for atomic swaps, and then you replicate the speed and the low transaction costs. And then to be able to build this infrastructure takes a long time, especially on Bitcoin, it takes a long time. So when the user experience reaches parity with the centralized exchanges, everything else is the same, except that you get these additional security and privacy guarantees. Now we have a comparison sheet that looks very much in favor of the new thing. So until you cross that threshold, it's hard to argue with users who reveal their preferences. Oh, I'm going to take risks.
I would also caveat that it's not as extreme as you said, Veronica. You were saying like 95%. It's probably more like 75, 80%, probably 3-to-1. And what's interesting too is it's a lot easier to create a bot and an API that can trade infinitely, especially if you have golden handcuffs and you're able to trade with no fees on a centralized exchange. When you're trading on chain, you're actually settling on chain. And so there's inherent fees. So even if you set up to trade on chain, you need to actually have the funds to pay for chain settlement and the fees that are associated with that DEX. So it would actually be interesting if there was, if there was no such thing as fees on chain, there was no such thing as fees to use a DEX. I bet you'd actually see the trade volume go a lot more closer to parity. It's really been interesting since 2020 and DeFi summer in the past 4 years, the innovations across DeFi and different types of liquidity pools and different types of incentives and different types of farming and yield and different ways that people have found ways to build liquidity. And now Radium is doing more volume than a lot of the biggest centralized exchanges. So I would say that it's not that black and white. And when you do match feature parity, as Chandra was saying, especially where it comes to fees, that's where I think the Pandora's box really opens.
Yeah, with all the extra use cases as well as like the functionality of the sexes and the fees. But do you think it's even possible for us to get to the point when the experience of traditional banking that people have in Texas is similar to DEXs? Because they are trying to appear more decentralized in a way. For example, we have BitGet and OKX trying to introduce their wallets into their apps of the centralized exchanges, and so they're trying to tap into that. Whereas we have the DEXs who are becoming better and better. So maybe we will kind of end up with some kind of merge of the two. Do you think that's a possibility at all?
I think there's layers of abstraction, right? And we still have a number of layers to go away and intermediaries, but as trust minimized as we can make these intermediaries. So when I say an intermediary, I'm not talking about a centralized third party like a broker. I'm talking about an atomic swap or some other stack of infrastructure. And so we do have a ways to go up of additional layers of abstraction that can make it as seamless as end user. The only thing I'll say just real quick, we're passing it over, is I think it could look entirely differently. I mean, when a new technology and a new medium comes about, usually what happens is that experience that you're trying to replicate, it's putting PDFs on the internet, right? People were like, why am I going to use email? Why am I going to do this? But then it gets kind of brought into an entirely new experience, or looks different, or gets brought into gaming or something else underlined and packaged differently. And so you're actually not comparing in the commoditized for hey, same exact thing, but just cheaper, better, faster, new, better mousetrap. You're actually building something that people want to do and change their behaviors to do around. And so that's actually where I think the big speed change happens, is when we design the new version of what this looks like, and we're not there yet.
This is a little bit of a deeper conversation than just will sexes or dexes. I think they'll both continue to exist. And the reason why is this all comes down to there's cost to decentralization. A centralized exchange can create a financial product which they think is hard based on market research and deploy it in Globe next day, depending on how much their developers are capable of. A decentralized protocol, by its very nature, has to replicate or at least distribute its rule changes. I mean, consensus change on Bitcoin is nearly impossible, right? Any upgrades, opcodes, forks, anything takes incredible amounts of time and diligence and rigor. So that's the cost. The flip side of this is you're minimizing the overhead of governance on one hand. That also hamstrings you when you want to experiment rapidly. So I think both of them will continue to exist, and the pendulum will continue to swing. Or maybe it'll split into, for these use cases, DEXs will dominate. For these use cases, centralized exchanges are going to continue just for that reason.
Yeah, I mean, we're on the cutting edge here too. Think about like the bottom line is that these industries, there are certain industries that drive like the technological advance, certainly in like networking, especially. It's basically electronic trading, porn, and gaming that like lead to all of the biggest like mass improvements of our networking, file compression, storage, all the like network resources that you're talking about. That's like those costs that we're talking about. And so, yeah, we're in the right place, right? Kind of like crypto, this kind of gray market, seedier, bad reputation areas are actually where like the internet moves forward. And so like, I don't think we should like shun that. Yeah, we shouldn't be all that, but like this like kind of speculation, electronic trading, pornography or e-girls, e-boys, whatever, and gaming are actually where crypto can kind of like cross that chasm. So it'll be interesting to see.
Yeah, actually, that leads me to a nice question. Where would you see the future of like the use cases of crypto that are going to drive the next cycle? What do you think those are?
I think that this last few months, we've seen this whole meta around like celebrity coins and political coins. And it's kind of around this whole idea of like SocialFi and being able to pay content creators. I mean, even now, Elon is encouraging people to post their videos to Twitter, right? Because YouTube is the default place that people go. But even these platforms are highly gated. They can be pushed around by political pressures. They're curating a feed based on different motives or different biases that the founders or stakeholders have in those companies. The cat is out of the bag for decentralized content creation. You don't only exclusively get your news from like 3 different news sites now. Bloggers and content creators and individuals have really, it's been awesome to see that proliferation over the last like maybe decade, 15 years, but people still don't earn as much of their keep. And I think like Substack has been really cool and kind of helping provide a website where people are able to better monetize their content, but not at a scale, right? And I think that crypto provides a lot of different forums and mediums that we're not used to. So you could create a meme coin, or you could create an NFT, or you could create a gated NFT. There's going to be lots of different experimentation and trials and fun things happening with crypto that you just can't do otherwise. And you can do microtransactions and streaming payments and all these things that just are not possible without this technology stack. So I think SocialFi and celebrities and people able to better monetize their brand and their content is a huge use case. And what that looks like, I think, is going to continue to evolve. But I'm here for it and I'm excited. And I think that ultimately it's going to be more money in the pockets of the creators instead of like record labels taking huge cuts from their musicians.
Yeah, I see David noting. Do you have anything to add?
I was going to say, hey, Chandra, you go, and I'll give last one so I can give the last question. But go ahead.
Sure. So making digital goods tradable generally has been a big problem until now, right? Let's take game publishers, for example. Game publishers hate to be marketplaces for their in-game goods for reasons that could be two. I mean, one of them is they want to control the marketplace. They want to have a cut of every transaction, blah, blah, blah. 2 is they don't inadvertently want to become securities issuers if they enable tradability. I mean, I'm sure as a securities lawyer, the baseball trading card case, and you're allowing all of these stuff to be created and they're enabling their tradability. They don't want that. But these assets have value. They have value independent of their tradability. It's a proof of skill. It's a proof of work in such a way that a user has done, a player has done, earned it. And now you have this seamless tradability layer on top of it. That massively expands the market because kids already do this, right? They do black market trading of accounts, this, that to you signals that there is a huge market demand for it. And all of the people saying, oh, we're going to do gaming platforms where you can take a motorcycle from this game and introduce into this first-person shooter. That's not the point. The point is to have all of these digital collectibles with some trust and assurances. So the scarcity of the assets, the level of skill it takes to actually create them or acquire them has to be assured, not the entire game engine has to be on chain. And then you enable seamless tradability of them in a decentralized way. And then I think that's gonna blow up, and gaming is much bigger than entertainment, sports. It's bigger than Hollywood. It's rapidly growing, and it's a generational transformation as a medium of entertainment. So that's where it's gonna be. The billion users are gonna be for crypto, I think. And of course, stable coins.
Yeah. Yeah, no, but I just like to abstract it. I agree with everything that was said, so I'll just like try to sound smarter even on saying the same thing. It's basically like all of this technology is trying to scale across space and time the like encoding, representation, and exchange of value. And just like you think of like when we did that with like communication technologies and the telegraph, they were first very lossy mediums. The like range of things you could express to each other in an in-person communication as part of the same culture and language is very different and like less lossy than trying to like type Morse code across a telegraph across the ocean and like read it, then print it out. We're actually pretty still bad at encoding and representing value. We like have like assets and money and stuff, but like there's all forms of value that are things that are valuable to us all around us that we're unable to crystallize and encode into something that is durable, share it, and exchange it. And that's kind of like the abstract of what I view crypto as, is like whether it's someone's time or whether it's like an in-game asset that someone's owed, or a relationship, or trust and credit, or something like that. There's all these things that we're talking about being able to now crystallize, like mosquitoes in amber, but yet not just bring them into fossils and put them in the ground, but actually interact and make them fly around at scale and experience with one another, make the world kind of like more robust tapestry of value exchange. That's the abstract version of like what I hear here and what I totally agree with. And so I think we're kind of like on the cusp. And there'll be a rocky way there, I think, but like we're on the cusp of being able to like encode and kind of make more efficient and representative the world around us. And so that we can ultimately, what this is all about is allocating goods and resources more effectively and efficiently to improve the welfare of everybody. And that's like what we can do with this. That's my politician speech. You see my flag in the background and everything.
That's great, by the way. Yeah, I'm voting for you.
Actually, that has been one of the main, campaigns that maybe at least it's me in my bubble that I hear all the news about how the president's new campaigns are now, they're like trying on to capitalize on crypto.
Yeah, I should have brought that up. I don't want to even talk about it. Now, we're here to, I think the politics is downstream of what we're doing here. Technology is going to change the culture, change behaviors, and that's our biggest influence from my perspective.
And you cannot really contain it. I mean, this is kind of the point of like, yes, we can talk about regulation, but if something is like, it's cliche to say, but if it's truly decentralized, you cannot really regulate it. Like it is in itself, that is by definition how it's supposed to be.
Well, I mean, that's where it breaks, right? Like, which of these systems can be shut down by powerful states and which ones can't? That's actually the way you distinguish the ones with long-term value versus the ones that probably won't last that long.
I'm with you. I'm unfortunately a little cynical there because I'm like, even Bitcoin, I'm like, man, I don't know. Like, you could shut that down right now. We've got to improve even that. So we're not there yet, but I agree with the sentiment. We've got to get there.
You have an optimistic outlook that we will get there.
I mean, one way or the other.
Yeah,
like all these, I don't know, like a student of history and economics and stuff, like technological revolutions. Like, it's rocky when there's like technological and social upheaval and changes. It can be rocky. So like, I'm not suggesting it's all rainbows for everyone in every class across the world at all times. But like, yes, I'm an optimist that the trajectory is up and to the right.
Yeah, that's good. But thinking of the future, I have this one question that would be good as a wrap-up that I would like to ask all of you, and maybe we can start with Dan. So if you think of this future, and you also think of your past times that you've been in crypto, and let's say I gave you a time machine, would you prefer to go back into the history at any point of crypto, or would you prefer to go and appear somewhere in the future?
Oh, and that's an interesting question. I think I'd prefer to go to the future. I think that to David's point, I believe the trajectory over time is up and to the right. I think in crypto, unfortunately, people directly associate that with the chart of a price. But what I'm talking about is actually more the implications and the instantiations of this technology. What that means from a end everyday consumer perspective. Hopefully the technology gets more ossified, more decentralized, and more abstracted, but it becomes a powerful back-end tool for things like content creators, for things like Web 2 apps that we know today. You know, maybe we have an automated Uber system that's a decentralized and peer-to-peer payment for unused cars that are sitting idle. I think there's tons of opportunities for this tech stack to actually make a big impact on people. Remittances on on a global scale and being able to provide more people access to the global economy, especially where products and services are becoming more digital natively. So I would say if we continue developing and building things for the right reasons, when you zoom out, I think that we're going to actually make a really positive impact on the world. Let's keep marching forward.
Chandra, would you go into the future or would you go into the past history?
Well, if you change the past, you can change the future. So I'd like to go to the past. If I zoom into the future, I get to observe, but can't really change anything, right? But yeah.
High agency. That's a high agency answer right there. And I'll split the difference and I'll say, I'd stay where I am. Like, I'd stay where I am. I'd like, I don't like a blockchain, right? Time doesn't mean anything. It's the ordering and the sequence, right? And so like, I'm kind of just moving along with this. And there's some stuff that like, as much as you want to try, you got to wait for other things to unfold or happen. So like, I'm not too anxious. I'm not too nostalgic. I'd stay right where I am.
I like
a very politician's answer.
Yeah. No, I mean, I like this.
Flag in the background is you're getting ready.
I know. I get subconscious. I like see it and I'm like, answer them like empty words, like a politician. Nah.
No, I do like this balance that we have like all the different perspectives. But overall, I think it's been great having you all. Thank you, Chandra. Thank you, Dan. Thank you, David. And maybe hope to see you sometime again on the podcast. If we continue doing it, hit the proof of work renaissance. Do you have any last words to add?
If people are interested in the trust minimized world that is building, we still strongly believe in millions of markets on top of Bitcoin. Proof of work we are big fans of. It's a singular achievement in monetary history. And check out portaldefi.com. Let us know what you think. And would love to be again. Thank you, Veronica. And thank you, David, for having us.
Yeah, I'll just echo that. Thank you to the Portal team here. And yeah, this is first of many of similarly situated proof of work centric companies, teams, and projects that we hope to have on here. So thank you guys.
Awesome.
Thank you, Veronica.
Ready to continue to follow along with Quai and development. Getting ready for mainnet.
Let's get ready for mainnet.